I hope you have watched my previous video in which I have predicted that Nifty will break 11,900 and come down. Don't buy until you are very clear that the green days are back. Until then, short and scalp carefully. Today let me share one of the most successful methods for beginners to identify the trend and scalp. In the Trading View chart, add Moving Average Exponential. Click on the settings and in the inputs edit the length into 200. If you want you may follow my style exactly and make it the thickest black line. Because this 200 EM line is the trend confirmation indicator. Now at beginner's hero, the Ichimoku cloud indicator. When you see it on your chart for the first time, you will curse me. I know. But trust me, I will simplify this mess and make it worth enough. Let's change the settings. Let's hide the other indicators for now. In the style settings, bring down the opacity of the lead 1 and lead 2. They are the outlines FN the cloud-like structures you can see on the chart. This is to make it slightly different from the other lines. Now, untick the lagging span line. Because we have added the better trend confirmation 200 EMA now, make the baseline red and make it thicker. Similarly, turn the color of the conversion line into green and make it thicker. To put it in simple words, go long or buy when the green conversion line crosses above the red baseline. If and only if the price action is above the clouds. When the clouds are interfering with the red baseline and green conversion line, it means the price is range-bound and going sideways. Never take trades when the price is stuck inside the clouds. Wait for it to break out or break down these levels. If you are entering when the green line crosses above the red line, either you scalp and exit according to your risk-reward ration or you trail your stop loss until the green line crosses below red. After that, it will get messier. If you would have waited, you will see more crossovers, and after this one, when the price action went above the clouds, you could have entered. Since the green and red lines never crossed, further, you could have trailed the stop loss and earned more than ever. Let's go back and find examples for the other way around. Exactly in the opposite manner, go short or sell when the red baseline crosses above the green conversion line. But in this case, if and only if the price action is below the clouds. Let's see if a stronger sell signal is in the past. Wow! See this one. The gap between the candles and the clouds is more, and similarly, the gap between the conversion line and baseline is also wider, which ensures that a strong fall is imminent. See, even if you missed the first entry and saw the second time red crossing above the green line, you could have taken the entry. You would have bagged a lot of profit. Then what if the trend is not strong enough? That's why I asked you to add a 200 EM indicator. When it is going range bound, it is mostly segregating around 200 EMA waiting to break down or break out. See how 200 EM classifies the entire chart into buying and selling environments. The gap between candles and 200 EMA is directly proportionate to the strength of the trend. So combining this with what Ichimoku Cloud says will give you more assurance. Please check my Instagram account to see how to utilize the MACD indicator to the maximum. For this trading setup, let's add one last indicator. Add pivot point standard and go to the settings. In the inputs, change the type from traditional to Fibonacci. Fibonacci pivot lines are leading indicators that predict the possible supports and resistances, so that we can avoid taking trades at its most important price levels and avoid the range-bound movement more. See, in this case, after the initial bull run, it took resistance and consolidated within that range for a while. but then it took support on 200 EMA and rose up slowly. When the green conversion line crossed above the red baseline, you can wait for the price action to cross the clouds and the Fibonacci line. And boom! It went up and never came back for the day. This way you would be warned about the possible rejection points, and you can modify your stop loss accordingly or exit if you are satisfied with what you have earned. At these levels, if you cross-check the volume, you can be more sure of the momentum. So that's it for today. Subscribe to this channel and follow me on Instagram for more tips and strategies of this sort. Happy trading!